In the last two sessions, we've seen some pressure on the bourse. It's been dragged down on Friday by the banks, the cement stocks and telcos. What's the story today?
Well, the market has been slightly down today, which is not surprising. A bit more profit taking again. And again, in the absence of any new corporate news, the market is really just trending sideways to slightly downwards.
All right, Egie, we have seen nonetheless, when the market rallied for the first 3 days of 2011, we saw the NSE gaining somewhat in the region of 5.90 or 5.59%. And many people are quite optimistic that in terms of the start of the new year, things are looking up for the NSE All-Share Index. What's your view in terms of what we might see for Nigerian equities this year?
Well, this year is obviously has started off well, and it should be a positive year. Most of the problems in the banking sector have been largely tackled, and now we are seeing the implementation of some of the solutions being proposed by the CBN through AMCON. So that obviously will provide some positive stimulus to the banking sector, which again is is the largest sector in terms of value traded and market capitalization. Also, when you look at some of the other companies in the brewery space, people are reporting good numbers, Guinness, Nigerian breweries. So some of the non-financials are also doing well. But obviously, the year has a long way to go, but it's very likely that we'll have a positive year.
Let's talk about the banks, because they form the largest constituency on the NSE, obviously with AMCON coming through and issues of buying back toxic assets of rescued banks. That's going to be the focus to a large extent of the first few months of the year. We have seen since December AMCON taking a phased approach to bond launches with consideration bonds initially. As their operations begin officially, how are you expecting that to influence the banking stocks? We're talking about profit-taking, dragging down banking stocks over the last 2 days. What are we going to see going forward with AMCON coming into the market?
Well, I mean, for the banking stocks, I mean, typically it's really a case of separating them between the distressed and the non-distressed banks. For the distressed banks, obviously that's really a trader's game. There's really no very credible scientific way to know what those stocks are worth until you know the kind of dilution that will happen when AMCON is done and when the new shareholders come in. But for the non-distressed banks, clearly, this is a good year for them, because whatever they get from AMCON is really largely going to be accretive to the bottom line. But in an improved credit environment in 2011, they should do well relative to 2010 performance.
All right, let's talk about the debt markets a little bit, Egie, because last year we only saw 3 corporate bonds being issued. What's your outlook for the debt markets in 2011?
Well, I think 2011 will be a lot better than 2010. I mean, 2010 was really when the tax differential between corporate and public sector bonds was wiped out to give everybody a level playing field. So we only had 3 issues, raising about 70 billion. Given the success of those issues, both financial and non-financial, we think that this year there will be significantly more issues in the market. We have to bear in mind that almost 20 public companies have resolutions saying they're going to issue corporate bonds. So it's really just a matter of execution. And we believe that this year there'll be a lot more effort on that option for capital raising, apart from just regular equity.
I mean, some have raised concerns that AMCON, with its various bond issuances throughout the first 2 quarters of 2011, is going to crowd out the bond markets, and investors are going to be faced with a situation whether they really rally behind AMCON and start directing some of the investments in that direction, or looking at other corporate bonds. What's your sense?
I don't think the AMCON bonds are really going to have much impact on the corporate bonds. I mean, these are 2 very different kind of instruments that will be funded quite differently. The AMCON bonds are largely 0 coupon. There's some restriction on their tradability on the short term, and it's not very clear exactly how those would be more attractive than buying a well-rated coupon-paying investment grade bond. So I don't really think that AMCON as an issuer will crowd out the corporate sector. It's really more along the state bonds that are of a similar kind of rating and tenure, but have very good coupons, or maybe some of the FGM bonds at the longer end of the yield curve that might crowd out corporate bonds. But I don't really think there'll be a crowding out effect this year.
All right. Now, in terms of broader activities within the bond market, some issuances on the part of the Debt Management Office in terms of their monthly bond issues, what are you expecting to see?
Well, I'll be expecting to see a slight pullback from last year's issues, which were more or less at a record. I think the government is trying to put their finances in order, and with very high oil prices, it's hard to expect the federal government at least to issue any more bonds this year than they did last year. So we'll be expecting that probably flat to slightly down from the DMO side.
I think at the end of last year, Egie, there was a bit of concern as to Nigeria really talking up the situation of launching a euro bond. Then, of course, we saw sovereign debt issues in Europe emerge and they had to postpone that. Now there are reports that they could be looking to launch the euro bond in the next 2 to 3 weeks, but certainly within the first few months of 2011. Given the situation persisting in Europe, is this the time to do it? Because also there's a lot of pressure for all of these issues around the euro bond and the to-be-launched sovereign wealth fund being sorted out under the current administration.
Yeah, I think it's the perfect time to go in for the Eurobond. It's a good way to start the year. I mean, it's just $500 million. I mean, in putting that in perspective in terms of Nigeria's GDP in the $200 billion range, it's really, really a small issue. It's really more as a benchmark issue to set the tone for the corporates and for other issuers from Nigeria to be able to issue based on the price that this Eurobond goes out at. So given the strength of the oil markets, I actually think it's a perfect time for Nigeria to issue. I'm not sure how many countries with the fiscal balance sheet or revenue, export revenue earnings of Nigeria are issuing bonds that are so small. It should be easily sold.
All right, now let's talk about risk factors and the fact that we're now seeing the beginning of the electoral process underway with primaries within the parties kicking off. Has that influenced the markets in any way, or have so-called political risks been priced in already?
I think the political risk has largely been priced in. I mean, so far there hasn't been anything abnormal happen in the primaries process. A few hitches here and there, but by and large, I mean, most of the governors, the sitting PDP governors, returned. The big one is the presidential primaries for the major parties. Once that's done, it becomes relatively clear who the main front runners are. And I think most of the risk is already priced in, unless we see a very unusual candidate emerge that has a chance of winning. So far, that hasn't happened.
All right, can you just give us an update on the power sector reforms? Because we know that for many investors, especially those looking at FDI, this is the biggest sticking block in Nigeria, infrastructure and energy security in the country. Apparently, the power company intends to bring down the cost of electricity by something like 65%. Is that exciting investors? Is that pushing up any sort of energy-related stocks?
Well, I mean, for now, there are no real power-related stocks on the market. I mean, what we have are really the oil marketing companies, largely retail. In terms of the energy, the power reform, I mean, the EOIs are out. I mean, the race is on for those who are going to bid for those assets and actually take them over. So the BP is doing a lot of work, road shows, publicity. In terms of the drop in power prices, I think the article has to be looked at in a bit more detail. The headline was a bit sensational. What it was referring to was the fact that most Nigerians self-generate power using everything from candles to burning wood to using kerosene and diesel generators. And people pay as much as 80 naira a kilowatt hour generating their own power. The current tariff is between 21 and 23 naira. So that 21 to 23 naira represents a 65% drop compared to self-generation. So that's really what the article was talking about. But it does show the fact that there's a huge market here, because where people are paying upwards of 50 to 80 naira a kilowatt hour to generate, they'll be very happy to pay 21 if they get stable supply. And that's really what...
Go ahead, finish your sentence.
So that's really what the article was trying to point out, that it's cheaper to buy power from a power company that can generate stable power than generate your own.
All right, thanks so much for that, Egie. We'll have this conversation later on. I just wanted you to give us an asset allocation. Can you do so in 10 seconds for any investor that wants to come onto the Nigerian market? Where should they be buying?
Well, the banks, obviously, and the consumer goods, the breweries and the banks, and maybe some of the cement companies.